Here are the two main price indicators that every crypto trader should know. Beginners must know. The best traders keep a close eye on the asset's momentum. This is why the RSI and moving average are perfect indicators for this task. Technical analysis, the study of chart patterns, is a tool that helps traders increase their edge over others. This is done by keeping the trader on the right side of the trend and providing warnings when the trend is about to reverse. There are many indicators and patterns that can accomplish this task, but no one specific indicator is suitable for all market conditions. Moving average. Moving average are trend following, are also called lagging indicators because they provide delayed feedback after a price movement has occurred. Relative Strength Index or RSI. The Relative Strength Index is a momentum indicator which captures price changes and acts as an oscillator ranging from 0 to 100 values. Example of a restricted market. In a range-bound market, the moving average cross each other and do not slope up or down for long periods of time. See the area bounded by the eclipse in the chart above where Bitcoin remains range bound and the moving average is flat. Such markets tend to be directionless and difficult to forecast and trade. Identifying an uptrend. Bitcoin was mostly stuck in the range. During this period, the moving average were flat and directionless. The price broke above the range and the RSI also surged into overbought territory. During the start of a new trend, the RSI generally remains overbought for the initial period of the trend, and the same can be seen here as well. Identifying a downtrend. Unlike an uptrend, which takes time to form and stays in effect for a long time, a downtrend is violent and can stretch for a long time. Similar to the 2018 crypto bear market, or can quickly reverse course after a sharp decline.